All right, let's talk about it. Bitcoin didn't panic, Ethereum didn't flinch, and the market, once again, refused to do what crypto Twitter promised it would do. Shocking. I know. Over the last 24 hours, inflation data came in exactly where it was supposed to. No surprise nukes. No emergency press conferences. No, this changes everything thumbnails. And suddenly, Bitcoin remembers it's allowed to go up. Apparently, when the world doesn't end, markets tend to stabilize. Wild concept. BTC tapped north of 92,000, ETH held its ground, and while everyone was staring at the big charts, privacy coins quietly chose violence. Meanwhile, crypto Twitter did what it always does. Half the timeline screaming, alt season is here. The other half screaming, this is a bull trap. And one guy replying, GM to all of it. So today, we're cutting through the noise. We're breaking down what the market is actually reacting to, why some alts are moving before others, and how macro, rates, and liquidity narratives are quietly steering this entire thing. Because here's the truth. This isn't euphoria. This isn't fear. This is positioning. And that's exactly what you want to understand before the crowd catches on. Coming up right after this, we'll take a clean look at the charts, the sentiment, and what today's price action is really telling us. Stay right there.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. Let's get grounded in what the market actually did over the last 24 hours, not what the loudest account wanted it to do. Bitcoin first. BTC pushed higher overnight, trading up through 92,000, briefly tagging the 92.5K area before cooling off a bit. That move came right after US CPI landed exactly in line, 0.3% month over month, no upside surprise. That matters because it tells the market inflation isn't reaccelerating, which means the Fed doesn't suddenly have permission to go full hawk again. Translation, risk assets get to breathe. Volume picked up modestly, not euphoric, not dead, just enough to confirm this wasn't a fake candle. Support around 91 to 92,000 continues to hold, and as long as that range stays intact, bulls remain in control. Not mooning, not dumping, just functioning like an adult market. Now Ethereum. Ether quietly did what Ether does best in these environments, held its ground. Trading around $3,130 to $3,200, ETH stayed bid while Bitcoin pushed, which is exactly what you want to see if this market is setting up for rotation instead of collapse. No panic wicks, no nasty staking drama, just steady accumulation and patience. That brings us to alts, and this is where it gets interesting. Altcoins outperformed Bitcoin today, but not evenly. Privacy coins absolutely stole the spotlight. Dash went vertical, up 60% plus, its biggest move in years. Monero followed with a strong push of its own, holding near highs. That's not random. Privacy rallies usually show up when markets start thinking about regulation, surveillance, and capital controls, not when retail is euphoric. This feels less like meme mania and more like positioning for uncertainty. Meanwhile, Solana pushed higher as well, trading around $143 to $144, riding broader alt strength and ongoing ecosystem optimism. Nothing parabolic, just constructive trend continuation. Now sentiment. The fear and greed index sits at 41, neutral, which in crypto terms means everyone's uncomfortable and arguing in replies. That's actually healthy. Bitcoin dominance remains elevated near 58 to 59%, but it ticked slightly lower, a subtle hint that capital is starting to peak outside BTC again. Not full alt season, not rotation chaos, just early curiosity. So to summarize the tape, Bitcoin recovering, not breaking out, Ethereum steady, acting like infrastructure, alts selectively moving, not indiscriminately, and sentiment cautious, not euphoric. That's the kind of market that rewards patience and absolutely punishes overconfidence. Coming up next, let's get into today's top stories, including why privacy coins suddenly woke up, what institutions are actually buying right now, and which narratives are gaining traction beneath the surface. That's right after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. Let's hit the headlines that actually mattered in the last 24 hours, not the ones padded with rocket emojis and zero substance. First up, Bitcoin rebounds as CPI comes in exactly on target. Bitcoin pushed back above $92,000 after US CPI landed perfectly in line, 0.3% month over month. No surprises, no panic. Markets like boring inflation data. Boring means predictable. Predictable means liquidity doesn't get yanked overnight. Traders interpreted this as confirmation that inflation isn't reaccelerating, and that keeps the door open for eventual rate cuts, or at least no sudden tightening. In other words, no emergency Fed meetings, no Powell breaks the internet moments. BTC's now strung together 3 green sessions, up over 3% from last week's lows. And if $92,000 holds as support, eyes move back toward $94,000. Not a breakout yet, but momentum is waking up. Next, privacy coins go nuclear. This one surprised a lot of people who weren't watching closely. Dash exploded more than 60%, its biggest move since 2021, absolutely torching short sellers. Over $1.3 million liquidated in a single push. Monero followed with solid gains, holding strength near recent highs. This isn't random. Privacy coins tend to run when markets start thinking about regulatory pressure, financial surveillance, and control narratives, not when everyone's feeling safe. As governments tighten rules and exchanges delist privacy assets, demand doesn't disappear. It just goes quiet until it doesn't. This looks less like a meme pump and more like a sector waking up after being ignored for a long time. Next, we have Tom Lee doubles down on Ethereum, big time. Tom Lee from Fundstrat is not backing off his Ethereum thesis. His firm added another $88 million worth of ETH around the $3,200 level, pushing total holdings above 4.17 million ETH, roughly 3.5% of circulating supply. That's not buying the dip. That's owning the dip. Lee continues to frame ETH not as a trade, but as infrastructure, driven by staking yields, layer 2 growth, and long-term fee demand. He's talking $7,000 to $9,000 near term and much higher over the cycle. You don't have to agree with the targets, but you should respect the conviction. Over on X, we have BlackRock versus the Fed. Ah, yes. Nothing calms markets like BlackRock politely telling the Federal Reserve what to do. Viral threads lit up after reports that BlackRock is pushing for rates closer to 3%, arguing tighter policy is choking growth unnecessarily. Crypto Twitter, of course, translated this instantly into rate cuts equals crypto moon. Is it that simple? No. But lower rates do increase liquidity, and liquidity does eventually find its way into risk assets. This narrative gained traction because it fits the macro mood. Pressure is building. Cuts aren't here yet, but the conversation has clearly shifted. Also trending on X, GeoDNet and the invisible infrastructure thesis. One of the more interesting narratives popping up today wasn't about price, it was about utility. Threads spotlighted GeoDNet and precision location data as the next foundational layer for AI, robotics, drones, and autonomous systems. The pitch? GPS alone isn't accurate enough. Centimeter-level positioning is the missing link, and decentralized networks might be the only way to scale it globally. This is early cycle thinking. Not flashy, not instant gratification, but exactly how real narratives start forming before price catches up. So that's the news landscape. Bitcoin stabilizing with macro support, privacy coins waking up hard, Ethereum being accumulated, not traded, macro pressure shifting toward easier policy, infrastructure narratives quietly forming. Coming up next, we're heading into the proof of thought mailbag, where you brought the questions, the hot takes, and yes, the roasting. That's coming up right after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's get into it. This is Proof of Thought, where we turn noise into signal, questions into clarity, and occasionally, we roast ourselves. Question 1. If Bitcoin is still below all-time highs, why does everything feel expensive? Great question, and you're not imagining it. Prices feel stretched because expectations ran ahead of price. ETF launches, election narratives, rate cut fantasies, all of that got priced in emotionally before it showed up on the chart. Bitcoin consolidating here isn't weakness, it's digestion. Markets don't move in straight lines. They stair-step, and when sentiment cools while price holds, that's usually constructive. Next, at Long Short Jim asks, are privacy coins pumping because people are scared of regulation? Short answer, yes. Longer answer, they always do. Privacy assets don't thrive in comfort. They thrive in constraint. When surveillance increases, demand for privacy doesn't disappear, it migrates. DASH and Monero moving now tells you traders are thinking one step ahead of policy, not reacting to headlines. Whether that trend lasts is another question, but the reason for the move is very real. At Lucy in the Sky of Crypto wants to know, is Ethereum still undervalued, or is that just cope? I appreciate the honesty in that wording. Ether isn't undervalued because number go up. It's undervalued if you believe staking demand continues, layer 2 usage keeps scaling, and Ethereum remains settlement for tokenized everything. Tom Lee buying isn't a guarantee, but it's a signal. Big money isn't trading Ether like a meme. They're warehousing it. That doesn't mean instant upside. It means long-term positioning. Okay, last one for today. Sen, where were you on Thursday and Friday? Did you rage quit crypto? Guys, we covered this yesterday. Yes, the accountability question. No, I did not rage quit. I did not get rugged. And no, the Fed did not confiscate my microphone. I was busy doing something revolutionary. I left my desk. Turns out SENB Media exists outside the internet, and sometimes real-world moves fuel what we do here, which brings us perfectly to the final segment. Because there's a reason we missed a couple shows, and it connects directly to SENB, Whole Shot Coffee, and why we were in Anaheim this weekend. Let's close this out.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Final thought. Right now, crypto feels quiet online. Views are down, engagement is down, and a lot of people are mistaking that for failure. It's not failure, it's filtration. The algorithms are choking on spam, the tourists are bored, and the people who only showed up for easy money have moved on to the next distraction. That's not a bad thing. That's what resets the board, because when the noise dies down, the builders finally get room to work. And that's exactly what we're doing. Last week, we weren't missing shows because of chaos. We were in Anaheim at Supercross, side by side with Ashley Filek, representing Whole Shot Coffee as a sponsor during a nationally televised event. On stage, in the pits, meeting fans, signing autographs, front row for the main event. That matters, not because of clout, but because it proves something important. SENB isn't an anonymous token. It's not a basement project. It's part of a real-world ecosystem with real businesses, real partnerships, and real execution. Whole Shot Coffee sponsors SENB. SENB amplifies Whole Shot Coffee. Ashley brings awareness. That awareness feeds back into the network. This is how durable projects are built. Not overnight, not during hype peaks, but during quiet periods when foundations actually matter. Price will move when it's ready. Engagement will come back when the market wakes up. But structure? Structure is built when no one's watching. That's today's SENB Daily Brief. Thanks for being here. Thanks for thinking long term, and we'll see you tomorrow. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, SENB Hero. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit senbheromedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.